Welcome, crypto fam, to the #1 daily Bitcoin pod, and happy Labor Day. Monday is here. In today's show, I'll be breaking down the latest Bitcoin technical analysis, as well as sharing the 5 things to watch out for in the Bitcoin market this week. We'll also be discussing SEC says it could challenge FTX crypto repayment plan. In fact, Q4 here around the corner, a month out, they're going to begin returning $16 billion to creditors. We'll also be discussing Max Kaiser predicts US dollar collapse within the next 6 months by February 2025. Also breaking news, Qatar introduces regulatory framework for digital assets. Let's go Qatar. We'll also be discussing central banks buying gold at record levels, but Bitcoin still outperforming gold. We'll also be discussing Bitcoin $110,000 setup still in play, but analyst warns of a sub $40,000 dip first. I'll be discussing this. We'll also be taking a look at the overall crypto market. All this plus so much more, yo, in today's show. But anyways, fam, if you're new to the channel, very important to smash the likes. It's free to do so. I mean, it takes a half a second, so please, it helps out. Also, hit the bell icon, turn on all notifications, and subscribe to #1 Daily Bitcoin Pod. Today is pod episode number 1748. I'm your fearless host, JV, and it's September 2nd, 2024. September is amongst us. June, July, August, all bearish monthly closes. Let's see where September takes us. Let's kick it off with our market watch, as we do each and every day. You can see on Coin360, Bitcoin sitting just above 58,600, down 0.33% on the day. Ether up 0.5%, trading above 2,500. XRP barely in the green, while Solana, Tron, Cardano all correcting and in the red. And checking out coinmarketcap.com, the current crypto market cap sits at a 2.05 trillion market cap. The Bitcoin market cap is sitting at $1.15 trillion. We got roughly 60 billion worth of volume for the past 24 hours, meaning it's up roughly 31%. And the current Bitcoin dominance is the same as yesterday at 56.2%. Ether dominance barely climbing back. We're currently sitting at 14.8. I think yesterday was like 14.5. And checking out top 100 crypto gainers past 24 hours, we got Ordi leading the pack, up 12%. Uni up 6.5%, and Sats up 5.5%. Below that, Aave, Ronin, and Mantra. Now, which alts, if any, are you most bullish on for this particular bull? Holla at your boy. And checking out the crypto bubbles. That way we get a visual perspective on the daily. Safe to say, I'd say maybe 60-40 red versus green. And zooming out on the monthly, not looking as pretty. Definitely a lot of major corrections. Some of these alts down 20, 30, 40%, maybe 20% in the green, 80% in the red. So about an 80-20 divide. And checking out the Crypto Greed and Fear Index today, we're rated same as yesterday, 26 in fear. So close to extreme fear. Can't we just get it over with already? Because the lower this number drops, and typically when we enter extreme fear, we have a big bounce back pump. So let's see what happens here this week. Obviously, it's just the first day of the week. The traditional markets are closed. Clearly, it's a holiday weekend. So happy Labor Day, family. But yeah, once we get back in extreme fear territory, I'll be anticipating the next pumpy pump. And checking out the time chain calendar. We're currently on block number 859,585. We got roughly 190,415 blocks remaining until the next halving, scheduled to take place sometime in April of 2025. And you can currently get 1,711 sats per dollar. That's right, 1,711 sats per US dollar at the current conversion rate. This is actually the 5 things to watch out for in the market this week. A lot going on, clearly. First and foremost, you're looking at a 1-hour chart. Bitcoin price courts the August lows. Bitcoin failed to impress around the latest monthly close, and conditions have remained tenuous. Now, TradingView shows that the bulls have been powerless to overcome the sell side pressure, which popular trader Scoo shows characterize the low time frame market conditions, quoting the analysts here. For most of the past week, there has been a clear spot buyer around 58,000, which is important context on bounces. Currently, the price is around the spot demand, but it'll need to see confirmations of demand with taker and passive buyers. Scoot nonetheless highlighted a broad lack of interest in derivative markets at the current price, suggesting the funding rates may thus stay negative or low for the time being. I do see overall the market is likely in favor of shorts from here as a hedge with the past week of spot selling. He also shared that, however, practically no growth in the market positioning since the sell-off into 58,000. This tells me people have stepped away from trading. Meanwhile, CoinGlass shows the bulk of bid support clustering at around 56,750 at this time on September 2nd. And also note September historically is also a bearish month, not as bearish as like in August, June, or July, but nonetheless, the numbers don't lie. Now for the next factor, we're going to keep our eyes out on this week. Labor Day week sees U.S. jobs in the spotlight. That's right. Ahead of the Federal Reserve's meeting on interest rates on September 18th, so we got a couple of weeks out. Market data is of key importance as markets thrash out expectations. The latest data from the CME Group FedWatch tool currently shows a minimal 0.25% rate cut as the meeting's most likely outcome. Let me know if you feel that will be most likely. Next factor, all abroad for red September. That's right. Bitcoin ultimately came in 8% lower for the month of August, setting the stage for what could be a grim September bear, or will it be a September bull? Let me know your thoughts. The ninth month of the year tends to produce losses in and of itself, according to CoinGlass, with average downside of around 4.5%. Now, August, by contrast, tends to be a green month, leaving this year as a historically poor performer. Despite this, it could all be simply a matter of timing, and history could still be on the side of the bulls. And in some of his latest market commentary, we have another analyst, Rat Capital, who says Bitcoin is still working on its post-halving breakout. Quoting him here, history suggests that Bitcoin tends to break out 150 to 160 days after the halving. That would mean Bitcoin would break out from its reaccumulation range in late September 2024. So will we get a bullish monthly close for this month we're currently just stepping into? Let me know your thoughts. He also is quoted saying, I wouldn't be surprised if Bitcoin consolidates just a little bit more beyond late September to achieve an October breakout, which would officially be Q4. After all, October has always historically been a strong month. That's right. So if history is to repeat or rhyme, expect fireworks in Q4, fam. Next factor to keep your eyes out on this week, the Puel multiple teases a buying opportunity. That's right. The concept of Bitcoin being in its transitory phase in its bull market is also supported by the classic Puel multiple metric. The multiple compares the value of the Biddy mined daily in their 365-day moving average to identify relative buy and sell zones. As CryptoQuant defines it, the Puel answers the question, if all mined Bitcoin were sold immediately in the market, how profitable mining pools are compared to last historical 1 year. The Puel is neither calling a macro top nor a bottom, while slowly heading towards its green long-term buy zone, characterized by a reading of 0.5 or less. Man, more crazy lightning and thunder again. I don't know if the mic is picking it up. I was like, whoa. Quoting them here, at present, the Puel multiple index is fluctuating between those two critical levels. Bitcoin Puel multiple chart. So there you go. And for the fifth and final factor to keep your eyes on this week, deep learning model favors a Bitcoin price bounce. Come on, bounce. Let's make it happen. While September is traditionally a red month for the Biddy, new analysis suggests 2024 may end up as an exception. Unprecedented times, anything is possible. Good point. In June, a similar experiment guessed that the price would track sideways just below 60 Gs in the coming month. Now, Crypto On-Chain, who compiled the latest data, said these were acceptable and close to reality forecasts, quoting him here. For this purpose, all the data from 2012 to today have been used as features. The output of the WaveNet model shows the probability of a relative increase in the price of the Biddy in the next month. And he shared a chart which shows the results showing the price action scoot upwards with a 50% probability of price reaching up to just beyond 65 Gs, baby, in September, quoting him here. The range of 0.5. Whoa, more crazy lightning. You're going to hear the thunder in a second. Whoa. Shows the area where the 50% probability that the price of Bitcoin will be in the range, and the range of 0.9 shows the area with the probability of 90% of the Bitcoin. So there you have it, yo. Now let's pull up some of the live charts, live and in the flesh. Right now, we'll start with the 1 hour. We'll work our way backwards here. As you can see, we're currently sitting at roughly, and the thunder continues. This is wild. $58,600. We do have some targets on the screen as well on the 1 hour. We do have a target sitting at 60,457, roughly $1,500 above where we're at, maybe 2 Gs. And we do have some bottom formations you can see. Now also zooming out, we'll check out the 4 hour chart. I'm just praying I don't lose like electricity. Anyways, here's the 4 hour chart. We do have some, obviously we did bounce pretty strong from the 57.9 low to take us to where we're at, but obviously there's no telling short term how low we can go. We may potentially correct even lower. Let me know your thoughts. And the current low, more recently, we tapped 49 a couple of weeks ago. Let's see if that is the low, or we could potentially drop lower. Here's the 1 day chart. Again, live and in the flesh. We got a nice green candle in the works. Yesterday was a big red candle. Yeah, I mean, things have been sideways trading and pretty negative overall for the past 3 months since, June, July, August. But again, we're finally in September. Let's see how we go from here. And zooming out, we'll check out the 1 week. You guys hear that thunder, yo? Pretty wild. It's like nonstop. So here's the 1 week. We still have that sexy cup and handle pattern sitting at 125,000. And then zooming out a little further, we'll check out the 1 month. And as you can see, it's been pretty sideways for the past 1, 2, 3, 4, 5 months. But we did have 7 consecutive green candle closes, which created that. You guys got to be able to hear that. Next, we're going to be discussing the repayment of FTX, as the headline here reads. SEC says it could challenge FTX crypto repayment plan. That's right. The U.S. SEC has warned that it could challenge payments made to creditors of the defunct crypto exchange FTX if the exchange chooses to return funds using stablecoins. And in August 30th filing to the U.S. Bankruptcy Court in Delaware, lawyers from the SEC said that while creditor repayments made with stablecoins may not be technically illegal, it reserved the right to challenge repayments made with U.S. dollar-pegged crypto assets. Following the collapse of the exchange in November 2022, FTX pursued several potential methods to make creditors whole, including a now-been plan to reboot the exchange. And while many creditors have called for in-kind payments, FTX's most recent liquidation plan has agreed to pay out creditor claims based on the U.S. dollar value of the asset prices at the time of the FTX bankruptcy in cash or with stablecoins, quoting them here. The SEC is not opining as to the legality under the federal security laws of the transactions outlined in the plan and reserves its rights to challenge transactions involving crypto assets. Now, additionally, the SEC noted that the current repayment plan had not yet identified a distribution agent, the firm that would be responsible for distributing funds to creditors, whether that be in cash or stablecoins. The SEC's warning drew ire of crypto pundits, including Galaxy Digital Head of Research Alex Thorne, Coinbase Chief Legal Officer Paul Grewal, and Lash, the regulator, for overreaching for the levying unreasonable threats at FTX creditors. In its September 1st post, Thorne said the SEC was once again reserving the right to claim that dollar-backed stablecoins should be viewed as crypto asset securities, despite the regulator dropping its case against Binance USD issuer Paxos back in July. This is the height of jurisdictional overreach. The SEC doesn't even make a case here. They are just unwilling to let it go. It is a bludgeon that should and must keep sharp, lest any legitimate actors designed to wield these boringly above-board instruments, said Thorne. Now, why provide clarity to the market when threats and aspersions will do? Investors, consumers, and markets deserve better. Way better. And as shared here on X, FTX News, $16 billion will be returned to the creditors starting in Q4, which will begin next month when we hit October. Just note, none of it is being paid out in crypto. It's going to be the USD equivalent. So I wouldn't worry about this impacting the market in a negative way, like with the Mt. Gox redistribution, etc. But there you have it, yo. Let me know your thoughts surrounding this. Now let's discuss our next story of the day. Max Kaiser predicts a US dollar collapse within the next 6 months. And shout out to Max Kaiser. His prediction came in response to a tweet from Radar Hits account, which shared the U.S. national debt reaching an unprecedented $35.27 trillion. That's right. This translates to a serious debt of $104,500 for every single American citizen. Kaiser warned that the U.S. dollar could potentially collapse probably within 6 months as a result of the spiraling debt. Radar Hits post hinted of the rapid increase in debt, largely due to the U.S. government's financial decisions, which have involved printing billions of dollars to fund various geopolitical activities, and average Americans have to pay for this. And in just 8 months from January, the national debt surged by an additional $1 trillion, rising from $34 trillion. Meanwhile, rich dad Robert Kiyosaki also pointed to the growing U.S. debt as a key factor that can drive Bitcoin's price to $100,000 per coin, possibly as early as next year. And now let's discuss our next story of the day. Here's the latest of what's going on in Qatar. Qatar introduces regulatory framework for digital assets. That's right, the Qatar Financial Center, a business center based in Doha, Qatar, has released a comprehensive regime for regulating and creating digital assets. The QFC regulators, which stands for the Qatar Financial Center Authority and Qatar Financial Center Regulatory, announced a framework that establishes a foundation for digital assets in the QFC. The rules include tokenization processes and the legal recognition of property rights in tokens and underlying assets, custody arrangements, transfer and exchange, and in addition, the framework has provisions for the legal recognition of smart contracts. And like free economic zones in the United Arab Emirates, which operate independently from the mainland, the QFC has its own legal regulatory tax and business framework separate from the rest of Qatar. The QFC allows up to 100% foreign ownership and 100% repatriation of profits. It also charges a competitive rate, a 10% corporate tax on locally sourced profits. Now, according to the announcement, the framework will ensure that the digital asset economy within the QFC is secure and transparent and adheres to international standards. The QFC said that the framework sets standards for asset tokenization, and furthermore, it aims to ensure trust and confidence amongst consumers, service providers, and stakeholders. Qatar Central Bank Governor, His Excellency Sheikh Bandar bin Mohammed bin Saud Al Thani, said the newly launched regulations are a milestone in realizing the country's third financial sector strategy. He believes the framework will bring significant opportunity within Qatar's financial sector. And back in November of 2023, Qatar launched its third financial sector strategy to become a capital market to help the country unlock its economic potential. The plan includes embracing emerging technologies to accelerate digital transformation. So there you have it. Crypto yo. So here we are. Dive into our next story of the day. Headline reads, central banks buying gold at record levels, but Bitcoin still outperforms. And yo, if you guys can still repost this on X and just let people know we're not on YouTube no more. The YouTube stream ended, but we're still live on X and we're still live on Rumble, so people can still watch the stream. So that's the silver lining. Here we are. Central banks across the globe have been stocking up their gold reserves at record levels in 2024 and a pivot to store value assets. In a September 2nd post, macroeconomics outlet took a BC letter, reported the global net gold purchases by central banks reached 483 tons in the first half of 2024, the most ever on record. It added the figure is 5% higher than the previous record of 460 tons, which was set in the first half of 2023. In the second quarter of 2024, central banks bought 183 tons of gold, marking a 6% increase year over year. The National Bank of Poland, the Reserve Bank of India, and the Central Bank of Turkey were the largest central bank buyers of the precious metal during the period. In late August, it was reported that the president of the National Bank of Poland, Adam Glapiński, revealed that the bank would continue to buy gold as it aimed to comprise of 20% of its reserves. And now we also have Tulu Capital Management founder Spencer Hike Amian commented that China, India, Russia, Saudi Arabia no longer trust owning Western reserve assets. And I don't blame them. Gold is the only neutral and non-volatile reserve asset, according to them. And you can see Poland has 18.68 tons, India 18.6 tons, Turkey 14.6 tons, Uzbekistan 7.4 tons, and Czech Republic 5.9 tons. So we also have Kim.com said that a new gold-backed stablecoin from the BRICS nation, BRICS stands for Brazil, Russia, India, China, South Africa, Iran, Egypt, Ethiopia, and the United Arab Emirates, will increase demand for the asset and result in a dollar instability. Quoting him here, when the BRICS gold-backed stablecoin comes out, trade in the U.S. dollar will drop hard. Central banks will exit U.S. dollar, and the U.S. money printing Ponzi scheme will burn. 14% of the global GDP will shift from the U.S. to other nations by 2030. Let me know if you agree with that. Meanwhile, global market investor commented that the gold has seen one of the best runs in history, adding that it is up 23% year to date, beating the S&P 500 gain of 18%. And thank you, Chandy. Appreciate the repost and just repost. And thanks for letting everyone know we're still live on X and Rumble. The YouTube went out due to the internet, but nonetheless, we're still here. Comparatively, Bitcoin has appreciated 37% so far in 2024, despite a 22% decline from its March all-time high. Nevertheless, it didn't stop the gold bug and crypto detractor Peter Shifty from commenting that Bitcoin gains only occurred in the first 2 months of 2024 and has fallen back since then, despite the spot Bitcoin exchange traded funds launching in the United States, which officially went live Jan 11th. Gold prices hit an all-time high of $2,525 per ounce on August 27th last week, and Schiff declared that the momentum has turned. However, the bottom line is that Bitcoin has still outperformed gold so far this year, so don't get it twisted, Shifty. Central banks remain wary of the relatively new asset class for now. However, so there you have it. Now for our feature story of the day. Bitcoin $110,000 setup is still in play, but analyst warns of a sub $40,000 dip first. So let's break this one down. Welcome everyone just joining the stream. So as you can see, based on historical chart technical patterns, Bitcoin's on track for 110,000 per coin, but some analysts are concerned about a potential correction below 40,000 before reaching six figures. In fact, the Bitcoin price on track to 110,000 by 2025 is based on a key technical formation, according to popular crypto analyst Titan of Crypto, who shared here on X. Here's the post. Bitcoin 110,000 is on the way. The cup and handle pattern is still in play. A bit more patience. The last quarter of the year is going to be epic. And in fact, what I shared with you earlier when we did our live TA, I shared the charts, and on the weekly, we do have that massive $125,000 cup and handle pattern, which may play out. And if it were to play out, I also believe it would be in the fourth quarter potentially this year. If not fourth quarter, then obviously 2025. However, I'm optimistic that we can still hit 100,000 plus in the fourth quarter, family. But let me know your thoughts. Now, the cup and handle is a popular bullish chart pattern, which I share with you every day, that signals the extension of an uptrend used to spot opportunities to gain long exposure to an asset. Another technical indicator also hints at a breakout towards 100,000 during the first quarter of 2025. According to popular analyst El Jaboom, quoting him here, Bitcoin giant inverse head and shoulder pattern. When this breaks out, Bitcoin will shoot above 100,000. My timeline is all-time high in quarter four and $100,000 in the first quarter of 2025. Let me know if you agree or disagree with this analyst that we could hit some of these big fat six-figure targets, and by what time do you think we'll do that? Now, on the other side of that coin, we have to be prepared for a potential retest of the current local lows. 2 weeks ago, we tapped a new low of roughly 49,000, and some say we could even see sub 40,000. So it's important we discuss this. Despite the optimistic six-figure predictions, Bitcoin could still see a significant correction first. Before the 2025 breakout, Bitcoin could risk a correction below 40,000, according to Bitcoin analyst Magoo, Mr. Magoo, PhD, who shared the chart below on September 1st on X. So can you see us potentially, it looks like he's saying around the 30,000 mark. Can you see us potentially hitting 30,000? Personally, I don't think that is the most likely scenario, but I'm open to all possibilities, family. You already know. So other analysts argue that the correction will not be as severe. For instance, we have Mustache eyeing a market bottom of 57,000. I think that's more probable in my opinion, but here's what he says. I know everyone's waiting for 53.5, but I think the low for Bitcoin is in here or very close to 57 if it continues to copy the COVID 2020 fractal as outlined right here, deja vu. So based on the historical data, technical traders use fractal patterns to identify the key support and resistance levels of potential trend reversals. Bitcoin currently has significant support at 57,000. A possible move below would liquidate over 860 million worth of cumulative leverage short positions, according to CoinGlass data. So let me know your thoughts on this $110,000 target as per Titan of Crypto predicts here. And can you see that potentially occurring here in the fourth quarter? Can you see that occurring in 2025? Do you think it's a pipe dream, never going to happen? Regardless, just let me know your thoughts, family. And welcome to the Q&A segment of the live stream. Let's go. My live on Roku Rumble and live on the laptop Rumble and not even close to being at some spot. I have no idea which one is real. Oh, never mind. I guess the local Rumble doesn't show the news and the graphs he has. I don't know. Never mind. It's a different spot. Even when I refresh them all, he is on the 110 prediction right now. Hey there. Did say who it was. Magoo. Well, I think Magoo is out there, but who knows? That is a lot of buying opportunity to pass in the 50s. I am all about that target. Not so much on the dip, being that low. Same here. I don't see us dropping sub 40,000. I actually think the bottom is already in, if I was a betting man. However, not financial advice. Everything I say, take with a grain of salt. This entire stream is for entertainment purposes only. I see we got 717 people on the X already. Again, we're streaming. Welcome to the uncensored version of the pod. YouTube stream ended prematurely today due to the lightning. The internet went out and YouTube couldn't handle it. But we maintained the stream live on X and Rumble. We already got through the content, so at least the content is over. Now we'll just kick it and chillax and welcome everyone just joining us.